Student loans in 2026 are a complete mess because the rules are constantly changing, forgiveness is really confusing, and refinancing looks really attractive even though it may not be the best option for everyone. Personally, I work with thousands of people to fix their credit, rebuild their credit, and do loan strategies, and student loans comes up time and time again, and there's not a lot of clarity around the subject. So by the end of this video, my goal is that you have a clear path of what programs are out there, what programs are best for you, how exactly to navigate the waters, and most importantly, a couple little secrets that you could use today to backdate any late payments you may have had that hurt your credit score and how to protect your credit moving forward. Starting off with the most important topic, which is forgiveness, and then we'll jump into the other decisions that apply to everyone, regardless of what program you may be enrolled in. Starting off with the most important question, which is who actually qualifies to have all of these loans forgiven. Newsflash, it only applies to a very small sample size, so we'll kind of brush over this topic and I'll let you know what you need to know, and then we'll move more into the topics that apply to everyone, like should you transfer them to a private student loan, should you request forbearance, should you keep them in some sort of income-driven plan, and much more. So, who qualifies for a student loan forbearance? If you're a teacher, if you're a government employee, if you work for a non-for-profit, if you're a nurse, doctor, or other medical professional, disability, if you repay your loans for X amount of months under an income-driven plan, like you could see below, and much more. More importantly, the big lesson you could take away from all of this is there's a decent amount of ambiguity, meaning there's a lot of things that are left up for interpretation, and that can mean many different things depending on who is actually reading over it and your specific circumstances. So my recommendation would be to go through this and see if any of these may apply to you. Like, as you can see here, there's a really specific one, like your school has closed in the past and while you're enrolled and you can no longer take a class, or it happened right after you withdraw, and you have a direct student loan with the government or a Perkins loan, and much more criteria that's really specific, and you have to pretty much read through and make sure you qualify and then contact the Department of Education to see if you're granted any sort of forgiveness. But the most common ones that we hear about are right here. If you're a nurse, doctor, disability, government employee, or teacher, and the criteria is right here. If you have 120 qualifying monthly payments or the equivalent while working full-time for a qualifying employer. So what's happening for a lot of people, they may be a teacher for 20 years, but they're only repaying the loans for the past 5 years. In that case, they have a specific program where you could buy back essentially some of your time while you were working and you weren't actually paying down the loans because they were either in deferment, meaning you weren't actually required to make any payments on it, or you were back in school and again you weren't required to make any payments, but now you could technically buy back that time if it lets you actually qualify for forgiveness. For example, let's say you were a teacher for 20 years, you only started paying back your loans 5 years ago, but the loans were from college 20 years ago when you started as a teacher. Technically, for the past 15 years, if that qualifies you to bring you to the 120 qualifying months, to get you to the finish line, they are able to make some sort of accommodation where you technically buy back that time and you qualify for a forgiveness package. And then for those of you that are interested, you could simply go to PSLF, Public Service Loan Forgiveness Buyback Process on studentaid.gov website, and you can see all the qualifying criteria and even contact them to see if you may qualify. But if you're anything like the rest of us, you probably don't qualify for any sort of forgiveness. So let's break down what refinancing looks like. Should we refinance? What program should we put these student loans in? If we do refinance, does it take away any legal protections to the Department of Education and the government? Aha, and much more. Starting off with the pros and benefits of refinancing. So the obvious one is you may be able to get a reduced interest rate than what's on your current student loan. So if you have a private student loan currently, at this time of recording this video, you're probably looking at a 6, 7, 8, or even 9% student loan. Whereas if you have a direct student loan from the government and the Department of Education and Nelnet and all of those student loan providers like Mohila, you're probably looking at a 3, 4, 5, or 6%, which is obviously significantly lower. So refinancing, you could save your interest rate depending on where you're currently at. But what they don't tell you, or they at least don't stress the fact, is that when you refinance from a government or a student loan with the Department of Education to a actual private lender, you're giving up all those protections like forgiveness, forbearance, deferment, all of those things that we just kind of touched on and will continue to touch on. You give up all of those rights when you decide to refinance with a private student loan. So the simple rule of thumb is you only refinance if you're 100%, you will not pursue federal forgiveness, and you're in a very comfortable situation. You ran your numbers that you could comfortably afford the private loan student payment, and you're saving at least a 1.5% to 2% interest rate. So it's a significant jump, and you're able to trade that opportunity cost of having the federal protection for the reduced rate and the reduced payment, or at least a reduced term in the future, to get them paid down even faster. And it's easy to say if you're in a comfortable position where you could make your payments and comfortably able to refinance to a private student loan. But if you're like the rest of the world and you're struggling to pay down your student loan debt and you're not sure what program to enter and what the actual federal student loan benefits are, then this part is for you. So at the time of this posting, you probably fall into one of 3 or 4 buckets. One, you're on a save plan, meaning that your payments are technically derived from what you make, your debt levels, and things like that you put into a qualifying form on the Department of Education website at studentaid.gov. 2, you're an income-based repayment where it's strictly on your income and they don't factor in anything else on the documents. Or 3, you're on an income repayment contingent plan, which as you make more, as you make less, the payment gets adjusted. Or you're reading all the headlines about the new plan coming on July 1st, 2026, which is basically a new income-driven plan. They keep changing the names, keep changing the qualifications, the criteria. It's very confusing, which is why I decided to make this video to begin with, which is the Repayment Assistance Plan, also known as the RAP, coming out on July 1st, 2026. Because according to the government and the federal student loans, the other plans, or a few of them, are going to be phased out throughout 2028. I know that's a while away, but they always like to give us a heads up that things are going to be changing, because that kind of gives them the flexibility to change things on either a short or long notice without kind of having people barking back. All that to say, my recommendation for the most affordable payment with the most amount of flexibility without giving up any sort of those protections, which we're also going to touch on in just a second, is the SAVE plan. It's going to be derived from low income, high income, and everywhere in between, and they're going to give you a payment that you're comfortable with, starting at $0. Yes, some people will not have to pay anything back yet, and that will go up to obviously a different tier depending on your current situation. At the end of the day, that is the best one for most people because it's extremely flexible in terms of how much money that you're paying per month. And more importantly, it's flexible in terms of you'll still qualify. Let's say that tomorrow the president wants to say, hey, there's no student loans for 90 days like what happened in COVID where it was a few years. You'll get those protections. Like we spoke about before, if you refinance into a private student loan, you're not going to get any sort of those protections and you'll still have to be paying on the loan, which is obviously, in most cases, depending how you look at it, a big disadvantage. If you could get the perks, why not get the perks? And speaking of COVID, a lot of people, when those plans became active, they maybe weren't totally familiar that their plan was coming off of deferment or forbearance due to the COVID pause, and they got all of these 90 to 120 day late payments on their credit report. Ask me how I know. I have a ton of clients that happened to, unfortunately, which destroyed their credit and completely tanked their credit, hurting their goals of getting new cars, new houses, setting up their family with business credit, so on and so forth. If that happened to you, I have a few things you could try to hopefully overturn those late payments and rebound your credit score. So the first thing you could try if you already have a late payment from a student loan that recently happened on your credit report is requesting what's called a retroactive forbearance. Basically, it's an accommodation where you could say to the studentaid.gov or the direct servicer, whether it be Mohila, Nelnet, or someone in between, that you weren't familiar the payments were restarting. Or if you're still in school, you could also use that, of course. And you're requesting an accommodation to backdate any of those late payments under the impression they weren't supposed to be active yet and push them to a future date. Usually it's something 30 to 60 to 90 days. It would sound something like this. Hey, studentaid.gov, I came across my credit report and I'm really upset. I saw a ton of late payments on my student loan. To my understanding, they were still supposed to be in a forbearance and they weren't active yet. I do take responsibility, but I could have sworn that they were supposed to be in forbearance and I'm requesting an administrative or a retroactive forbearance. Some of them use different terms to backdate these late payments and make it current under the impression or the contingency that I make payments moving forward and they start, let's say, in 30 days. Most of the time they will accommodate if you do that by a phone call. In rare cases, they will ask for you to do it in writing or they'll have a form on their website, depending again if it's with Mohila, if it's Nelnet, so on and so forth. But it is something they offer. I've had hundreds of clients use it. Someone just used it last week and it worked out successfully. But again, your mileage may vary, as they say, meaning it may work for you, it may not work for you, but the bottom line is it's worth a shot because worst case scenario, you're in the same situation as you are now with the late payment still in your report. Now, if the late payments, let's say, weren't granted a retroactive forbearance, you could always try to challenge them with the credit bureaus, which is something I also specialize in, to hopefully have them either corrected, updated, or removed from your credit report to ultimately build your score and protect it moving forward. At the end of the day, I know I did a lot of talking, but hopefully this was helpful. And to recap, let's go over a quick checklist. Starting off with number 1, confirm if you're active or eligible for a forbearance or a retroactive for credit to buy back some of your time. If, again, you're a teacher, you're a government worker, if you work for a nonprofit, if you made a certain amount of qualifying payments on an income-driven plan, and much more based on the criteria we went over. If you're not, great, welcome to the club. You're just like the rest of us and you're human. To number 2, do not refinance to a private student loan unless you can guarantee you're saving 1 to 1.5% interest, which should be at least $100 per month, and you could comfortably pay them down. And if you lose your job or something happens, that you're going to be protected and you have enough money stored away where you can still make the payments. Because remember, moving them from a public to a private removes all of your protections as far as the government is concerned and the federal student loans are concerned, so you won't be able to take advantage of any of those benefits unless miraculously the private lenders offer you those same perks, which, I'm sorry, but that's very rare and it's probably not going to happen. Number 3, address any late payments that are currently on your student loans with either a retroactive forbearance or challenging them with the credit bureaus. But before you decide to do any of that, make sure the proper plan is selected in your studentaid.gov account, whether it be a save plan like we went over, an income-driven plan, or something in between. And every year you have to recertify for those plans, even if you once did it, to make sure you're protected moving forward. So make sure to log into your studentaid.gov account and get that handled immediately. And then number 4 is keeping your payment history clean moving forward and making sure to subscribe for the best credit tips to maximize your benefits and fix and rebuild your credit score, as well as maximize your finances. Hope you enjoyed, and until next time.